We're going to move now to our continuing coverage of the Liberal government's latest budget and how it intends to pay for the $53 billion in new promises. Canada's wealthiest individuals and corporations will soon pay taxes on a larger share of the capital gains they earn, like the profits from the sale of stocks or an income property.
We don't think it's fair that a teacher or electrician pays taxes on 100% of their income, while a multimillionaire pays taxes only on 50% of the passive income they make on capital gains. So we're going to make them pay a little more.
But business groups aren't happy about that. According to the Business Council of Canada, the government is punishing the investors it relies on to generate growth. That means fewer good-paying jobs for Canadians. The Canadian Chamber of Commerce says throttling the success of Canadian businesses with new taxes will limit opportunities and employment for Canadians. And the Canadian Federation of Independent Business says the capital gains tax increase has the potential to demotivate Canadians from getting into business in the first place. Here to respond is the Minister of Small Business, Rechie Valdez. Minister, it's good to see you. Thanks for coming in.
Thank you so much for having me, David.
You heard the reviews of the budget there from some of the biggest business groups in the country. They don't like what you're doing on taxes. How do you respond?
Well, first and foremost, I just want to say that 99.8% of Canadians will not be impacted by these changes. Again, as you heard the Prime Minister said earlier, it's really the ultra-wealthy that will be paying additional taxes or a little bit more. And really the whole reason why we're doing this is because we're trying to create fairness for every generation. Whether you're someone who's trying to look to purchase your very first home or whether you're an entrepreneur that's wanting to start your business, it's really creating that fairness for every generation, and particularly those who are young, Gen X and millennials.
99.87% of Canadians may not be affected directly because they may not have capital gains in excess of $250,000, but they do work for companies who will be affected directly by this. And the consensus from a lot of the business analysts and lobby groups is that it's going to limit investment and maybe limit employment, which obviously would affect Canadians.
Well, what we've done in Budget 2024 is we've actually increased the lifetime capital gains exemption from $1 million to $1.25 million, and that is actually going to really help a small and medium-sized enterprise benefit from that exemption. And also, we also created a Canada entrepreneurial incentive, and that's really to help increase. So for Canadian entrepreneurs in the innovation and productivity sectors, they will get an additional $2 million there of an exemption at an inclusion rate of 33.3%.
But if capital is now going to be taxed at a higher rate, and the people who have the capital and make their living and make their profits from the capital say it's a disincentive to investment, I mean, what kind of analysis do you have that isn't the case, that this will not have a dampening effect on economic activity, productivity, and employment in the country?
Well, what I can say is if we compare Canada to the U.S., in Canada, we have a tax environment that is very competitive compared to the U.S., and even better than New York and in California. Here, again, through our incentive, it's really there to increase and encourage innovation through entrepreneurs, and again, through the lifetime capital gains exemption and increasing that from $1 million to $1.25 million, it will certainly help with that.
When you just look at the rates, yes, it's arguably competitive with the United States, but they have a whole suite of deductions available to them in the U.S. Corporations in particular do that aren't necessarily available in Canada. The government here anticipates an additional $6.7 billion in taxes from this in the current fiscal year, but that hinges on your ability to collect it, that this doesn't cause a change in behavior, and the people with the means to have this kind of wealth don't engage in tax avoidance.
Well, one of the things that we've also introduced through Budget 2024, which I'm particularly proud of, is our investments. That's $2 billion in artificial intelligence. As I've met with many small businesses across the country, they've asked us to ensure that we're looking forward to how do we help small business pivot in a world where we're moving towards artificial intelligence. And these investments, and in particular $200 million dedicated to helping AI startups, will certainly help with this regard in terms of investment. And in terms of what our government has done, we've also leveled the playing field for women entrepreneurs. We've invested $7 billion into our women entrepreneurship strategy, our Black entrepreneurship program, and really by leveling the playing field, what we're doing is we're creating an environment where everyone can succeed. And the one thing I'm very proud of, being an entrepreneur myself, is through Futurepreneur in our Budget 2024, we're putting forward an investment of $60 million to Futurepreneur, and that's going to benefit entrepreneurs age 18 to 39.
Right, but how do you ensure these new measures don't lead to tax tax avoidance, people looking at other ways, or maybe even taking investments and making them or moving them outside of the country? Because often the wealthiest people are the ones with the means to take these sorts of measures. They're the hardest people to get the extra cash from. And when you're talking about capital gains and people with this level of wealth, and corporations in particular, how do you ensure you're actually able to collect that cash?
Well, what I can say in the U.S., if you compare us just to our folks in the South, is they're being taxed on 100% of their capital gains. Where again, here, through our lifetime capital gains exemption, we've increased that from $1 million to $1.25 million. We've had the additional incentive for Canadian entrepreneurs, and that will certainly help it because the inclusion rate there is 33.3%.
Right. So the Canadian Federation of Independent Business has said that the entrepreneur incentive picks winners and losers, and it creates an uneven playing field simply because of the sector you're in. So that a company involved in the innovation sector will qualify for this, but someone in a more traditional industry wouldn't, and you're creating an uneven tax measure there that punishes people who are in traditional industries. How do you respond?
That particular incentive is focused to spur innovation and productivity, but there's so many other investments that we've made through our government, whether that's our global innovation clusters that have helped different industries, whether that's our agriculture industry or pharma care industry. We've had several investments, not just the ones that you see in Budget 2024, and we will continue to invest in small and medium-sized businesses across the country.
There has been some pushback that this could affect family doctors and other professionals who incorporate their practice for the tax advantages that a corporation would have. So while individually, if they were, say, working in a hospital, they would not necessarily be affected by the new capital gains inclusion, but if their corporate structure is such that they're relying on corporate investments to pay for their future and their retirement, they're going to be hit. And that in a country that's already struggling to have enough family doctors, this creates a disincentive for some of them to work in Canada.
We recognize that, but one of the things that we will continue to do is encourage foreign credential recognition to help we know that coming out of the pandemic, our healthcare has really been hampered and there's a really challenge with labor, but the investments we made with foreign credentialing, we've already made a significant investment in previous budgets, and in this year we've topped that up, and we will continue to invest to ensure we're encouraging bringing talent from other countries to get their credentials recognized, and that will also encourage them to get more jobs here and fill the desperate labor market needs that are required in our healthcare industry.
No, and I understand the impetus to try to accelerate health professionals in particular to be able to work in Canada through the standard. But if doctors who are here now, who are set up through the existing corporate structure that relies heavily on capital gains income for their retirement and for their future, because they wouldn't have a pension in this sort of a situation, if they balk at the situation that has been created by this change, I mean, how do you deal with that? The goal is to not increase the gap in medical coverage, right? So how do you respond to the concerns being raised by people in that sector that this is potentially punitive to them?
If I take a step back to what I mentioned earlier, and you heard the Prime Minister said it, what we're really trying to do is really create a Canada that is fair for every generation. If we think about all the benefits that will help for young Gen Z and millennials, right now, it feels like the challenges are stacked up against them. We're trying to give them a better future for them to feel encouraged, whether that's to buy their first home, start their family, just like I did once upon a time. We really want to create an environment that will help them. So yes, while we are, the ones that are being taxed are the ultra wealthy, at the end of the day, what we're ultimately trying to do is make a more fair Canada, and especially those who are young millennials and Gen Zs.
There has been some reaction from people who have worked on federal budgets in the past. David Dodge, a former governor of the Bank of Canada, former deputy minister of finance, he said he was concerned that this budget would take the country in the wrong direction, and he says since the details have come out, I have these concerns now, knowing what precisely is in the budget. He told the Wall Street Journal, and David Rosenberg, who's a well-known financial analyst, says this is among the more misguided budgets that we've seen in Canada. They don't like the increasing high level of spending. They don't like the capital gains tax. What do you say to these people who have the ear of the investment community and have the ear of Bay Street?
Well, what it comes down to is what Canada needs right now is more homes to be built and faster. we are definitely focused on that. We're helping to build and drive an economy, and we believe in investing in Canadians, whether that's entrepreneurs or helping invest in families, in seniors, through our different initiatives, whether that's $10 a day childcare to help benefit women. In fact, more women have entered the workforce than ever before. That's more women contributing to the larger economy, and that's even helping them start their very first business. We're building more homes faster, building the economy and strengthening it, and we believe in always investing in Canadians and not just cutting things or cutting programs and cutting back, because we believe that Canadians deserve to be invested in.
But do you think there's enough here? I mean, you're the Minister of Small Business. Do you think there's enough here on growth, on productivity? Because the business community is kind of outside of specific things like AI and the investment tax credits, which target key industries to your industrial policy. They say broadly, there's nothing there that can be globally applied to help all companies scale up and grow and get more productive.
I've mentioned already all the different investments we've made already to really drive inclusive entrepreneurship. We believe that, again, by including more people and making it a more inclusive environment through our women entrepreneurship strategy, that is going to encourage $150 billion just by that one investment alone in women entrepreneurs. That's just one example where we're going to continue to invest in Canadians and supporting entrepreneurs.
Okay, one last thing. Your government has said it will urgently return more than $2.5 billion in long-awaited carbon tax rebates to about 600,000 small and medium-sized businesses. This is something they've been waiting for years. Can you give us a sense about the size, the scope, and the timing of those benefits? Because there's a lot of small businesses who have been waiting for this, and they don't quite know what to expect.
That's a great question. So through our budget 2024, the size of it is we're looking at $2.5 billion. That'll be going and flowing back to approximately 600,000 SMEs across the country. I encourage SMEs to file their taxes for 2023 by July 15, 2024. And as long as you do so and you're a corporation that has less than 499 employees, you will be able to receive the Canada Carbon Rebate.
Does every business get the same, like every household gets the same on the individual carbon rebate? Or does the size of it depend on the scope and scale of the business, or is it just a flat amount?
Once we have those details, we'll be able to send it out to SMEs across the country.
Okay. Rechie Valdez, Minister of Small Business, thank you for your time today.
Thank you.